So I heard that inflation data was being released this week. What happened and what's your take?
Yeah. So on Thursday, CPI, that's the consumer price index. That's the inflation that us consumers feel when we go to the grocery store, when we go and buy a new vehicle, when we're going to buy or rent a house. And that came in as expected. I mean, it still went up month over month, but it's just been slowing down. It's inflation is still rising, just at a slower pace, which is what the Feds would want to do. I mean, eventually they want to bring it negative because they're trying to bring it down to their target rate of 2% annually. So we got as expected consumer price inflation. And then on Friday, this morning, we had producer price index, which happens to be the cost of manufacturers to them to build products, to sell their services, the cost to get goods out to the economy. And now what can happen with producer price index, which came in higher than expected, it can lead to higher prices for consumers later. So if we're seeing higher production prices, manufacturing prices, the producers can choose to push the cost on to the consumer. Now, this is the first month we've seen the real big spike in producer price index because commodity prices such as copper, gold, lumber, and then energy prices like crude oil, which leads to gasoline, have been going up significantly over this last month. I mean, crude oil, which leads to gasoline, natural gas, diesel, kerosene, they're up 10% for this last month. So we're seeing a spike there. So the producers right now are paying more money to produce goods, and we'll see if they push the prices on the consumer later. So consumer price index is like a downstream effect of producer prices.
So energy prices are tied to the producer price index.
No, energy prices are tied to the market. So if energy prices go up, that means the prices the manufacturer for the producers goes up because you got to get a transportation cost more. Your petroleum products cost more, which are in all kinds of goods. So that's why with higher energy prices, we see higher producer prices, and then higher producer prices can lead to higher consumer prices.
And what starts that? What is the first initial spark of this higher producer price index?
Higher, I mean, there's quite a few factors in there. Commodities like lumber, copper, and if they're paying more for those commodities and supplies, they can choose to raise their prices, or they just pay a higher cost and aren't not as profitable as producers. So the producers get to decide if they want to pass the numbers on to the consumers. Now, as far as energy, crude oil specifically, now that's a whole different ballgame. You know, the Middle East controls the supply, and they can increase their supply, they can lower their supply, and then they also have to counterbalance the demand. If there's a lot of demand, you know, prices can go up. If there's less demand, prices can go down. But really, the OPEC controls. That's the Saudis, Iran.
Okay, Saudis and Iran.
Yep, the oil-rich, the Middle Eastern countries. So right now they slowed down. They lowered their supply, and thereby it raises the price of oil.